Welcome to Beyond Business Barriers, powered by insights, driven by strategy, and yes, assisted by AI. I'm your host, Roy MacEwen, and today's episode is part of a special series where we sit down with industry leaders to dig into what's working, what's not, and what the future holds. I'm excited to have Larry on with me today on Beyond Business Barriers. Why don't you start things off by introducing yourself, Larry?
Thanks. So thanks, Roy. The thing people know me best for really is in the mortgage industry, which I joined in '93 as a loan processor. A lot of folks since then have come and gone. I've stayed, and for 20 years after '93, I was primarily in residential lending, helping borrowers directly. And in about 2012, I switched over to technology side to go work for a little company called Ellie Mae at the time. They built a piece of software called Encompass. Since then, it's now owned by Ice Mortgage Technology, which also owns a New York Stock Exchange, kind of big. That Encompass software powers somewhere in the range of 3/4 to higher percent of all loans processed in the United States. And I'm an expert in that field. And so my mission really is to help people learn how to master that Encompass platform. I'm also a huge proponent of workflow before technology. So I'm a process oriented frame and mindset. And that's for that's what I do personally. I'm sitting here in New Jersey, in southern New Jersey, uh, and really just enjoy spending time with family. I'm gonna have my first grandbaby here born in a couple of months, so everybody's kind of getting excited around here. And so while I'm focused on
Yes.
growing my business, Mortgage Workflow Partners, I'm also busy helping everybody get ready for this new little baby. So
Oh, I think
that's
that's
me,
going to
Roy.
be I think that's going to be such a great part of your life, grandchildren. I'm looking forward to mine. I haven't have any yet, but I'm looking forward to it. I have to say.
It's funny. It's a funny thing when not it, listen. Kids aren't for everyone, by any stretch, and for me, I had my two kids when I was really young. I was 21 when my first was born because I said, my wife of 33 years now, we said we do not want to be changing diapers in our 40s because we know we're going to be really tired. So now we're looking forward to changing diapers in our 50s. But that's another
Yeah,
that's another angle.
that's thing though. That's a part-time thing, eh? You can implement yourself when you wish, and you can kind of make the rules up.
Yeah, 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 yeah. It's a funny
I'm
it's a
jealous of
funny thing.
that. I'm jealous.
I will you'll have to follow my escapades for and everybody's like, "What are you gonna call yourself?" I said, "Grandpa." I said, I'm a very traditional kind of a thing. Well, my wife will be grandma and I'll be grandpa, and you know, that'll be fun. That'll be great. Looking forward
Well, it's whatever comes out of the child's mouth first, too. That's what they
to
call you, and that's
it.
what you will be. Just so you know.
Yes, I know.
Always be
I know.
prepared, but never plan.
I know how these things work. It's all good.
So now, what does a typical day for Larry look like, if such a thing exists? Start me out in the morning, when you go to work, when you do your business. How does that go for you?
So last year, so first of all, because of my time, I share with you back in 2012, that's when I went remote. So as the world really got to have to go to remote in 21-ish, I actually have been working remote since 2012. And so, for me, and I was always athletic growing up. I wrestled straight through college. And so for me, the staying active in the morning, so my average day, that's what you're asking me, right, Roy? You're like, hey, what happens during an average
Oh
day?
yeah,
Yeah, yeah.
absolutely. Yes.
So for me, it's usually it's waking up sometime, depending on the day, sometime between 5:30 or 6:30, and doing some working out. Um, we've got two dogs. One of them's sleeping back here behind me. She comes up and rests down. Um, but we usually walking the dogs in the morning and at night, and then so I tend to get I close my rings on my Apple Watch pretty easily, which is good for me. But it's really while I'm doing that work, I'm also running my business, right? And so this time last year we had 4 people. I now have 17, We had maybe 7 or 8 projects. We now have 25. So these are small companies, banks, credit unions, independent mortgage bankers across the country, all 4 times, actually 5 time zones now. So it's extraordinarily complicated. And so my mind is always thinking about who's doing what. Is this happening? We use a couple different technology platforms to kind of assist that planning. But for me, as I shared in the very beginning, I'm extraordinarily process oriented. So for me, it doesn't really matter how much has to get done. It matters in the sequence that I get those things done. And so I'm constantly thinking about how do I make sure that I stay human with work-life balance, and then also how do I get work done in a prioritized fashion. It's kind of
Well,
me.
that's a pretty honest answer. I appreciate that, Larry.
Yeah,
That's what I was looking for.
here I am. It's easy.
All right, it's easy. Exactly. That's the thing. And you speak about yourself. Once you look at yourself as you get older, it's much easier to um, plan as you go because we have so much information regarding of things not to do from previous experiences, and people look towards people like yourself as someone who's experienced. I mean, you said you started working remotely. What year? 2012 you
2012.
start?
Yeah.
Yeah. So, I mean, that was before it
Yeah.
was a thing, right? So,
Yeah. It was, it's in the mortgage lending space. As soon as we started going paperless, which was about 2010, 2011, it became easier to work remotely. Prior to that, you had contract workers and you'd have to send files. Again, remember, it's really easy to forget how hard it was to work with technology 13, 14 years ago, 15 years ago. Where now anybody, we're on Riverside's platform, right? Just spin something up and boom, we're recording, and it's everything. Somebody figured all this stuff out. Back then, it was you're driving to the office. You're working with paper files that I'm not, that are this thick, that are 3 inches thick in some cases, and managing those logistics and how you do your work, was challenging. And so, I think I don't know these exact numbers, but to me there's a high level of relationship trouble in the mortgage space because there's a high amount of pressure without balance. And so where um my like I said, my wife for 33 years, she kind of knows what I do all day, but she doesn't. She's like, I don't know, he works on a computer, like he talks to people, like she's a nurse. And so part of my looking back and part of what I try to teach people about is you don't have to really, I mean, work is always hard, but you don't have to, if you can do it correctly, if you can do it in the right sequence, you don't have to replicate yourself um, to an unnatural extent. So in other words, where I see a lot of people having struggle with what they're doing is they've created these responsibilities that are just unsustainable. And that could be a personal responsibility or it could be professional, but they're there. And for whatever reason, I've been able to figure it out, even as a growing company. I've been able to figure out a responsible way to scale. Um, and that's why I created the company. That's why I created our Mastering and Compass series for other administrators, so I can share these lessons, um,
absolutely.
before I leave the workforce.
No, that's fantastic. I commend you on that. I appreciate that.
Thanks.
Now, the mortgage world, it's been all over the place lately. It's in the
Mhm.
news. Rates are jumping around, borrowers expecting more, faster. What shift have you seen that's really made you step back and rethink how you do things?
Well, I honestly haven't changed much. Truthfully, I think I'll take that question. I'll say, what do I see other people doing? Um, so this past week I was out in Long Beach, California. There's an association called Farm Credit Association that I got introduced to Um, as a speaker, I went out to this Farm Credit Services home lending conference annually. They get together. It's a huge organization that I knew nothing about. And the reason why I'm bringing this up is because when I was out there, I met a peer who was retiring. He was 62 now. He's retiring, and we shared stories about our histories. It was a really cool group. It was a great group, and we talked about what happened before computers and workflows and things like this. And we laughed about how there's this general concept that interest rates are too high, and interest rates need to be lower. And we talked about the refinance boom of '93 when rates went to 7.5. We talked about the refinance boom in '03 when rates went to 6.5. Like, these are real numbers. This is really what happened. And we literally were just laughing at it. We couldn't give money away fast enough at those levels of interest rates. And and so then we talked about today, and I'm very public about my position that it's not the interest rates that's a problem. It's the affordability that's the problem. And this was also a big conversation at the farm credit meeting, where the credit unions that are part of there are trying to figure out ways to help first-time home buyers, especially, be able to afford to purchase a home. And interest rate is actually not at the top of the list. What do you think, Roy? I'll give you a pop quiz. What do you think is the top of the list for people being able to afford their first-time purchase?
Not having I know here a big thing is not having the money to put up front.
Right, exactly. It's always the down payment. So
Yeah.
so when one of the credit unions came up with an 85/15, so they'll finance 85% in the first mortgage, and then they'll finance a second mortgage at 15%, and their borrowers can afford the monthly payment. They're keeping their debt to income ratio, qualifying ratios within guidelines, whatever those are, and I think it's 43% total gross. And the idea is that it's not the monthly amount, it's the down payment. So then I met with a lot of credit officers there, and I said, okay, let me ask you a crazy question. I said, when you're qualifying that, I think it was 43. When I'm qualifying that 43%, are you including for all the streaming services they pay for, childcare they pay for, food services they pay for?
No.
And of course, the answer is no, right? And I said, how close are we to qualifying an average person under debt service coverage ratio qualifications, which effectively is cash flow, right? Can I make enough to pay all my bills? What is the proclivity of me defaulting on any particular debt because of my cash flow? And I suspect we're not far away from that. I personally suspect. I've been saying this literally since probably 2003, where a borrower would call me and they'd say, "You call me, Roy." You say, "Hey, Larry, I want to borrow some money. I'm buying a house," and I'm like, "Great. What are you looking for?" And they'd say, "Well, what can I qualify for?" And I'd say, "How quickly do you want to go into foreclosure?" And they'd be like, what do you mean? I said, "Well, do you want to become totally house poor, that if the roof goes or the furnace breaks or your kid crashes the car and you need 5 grand to pay?" I said, "You're gonna go behind on your payments, or do you want to have an affordable situation where you can do that and you can not stress out about that? What would you like to do?" And nobody else is
Exactly.
talking like this. Nobody else. And it's the same conversation I have today, which is what I shared with you earlier. If I went back into mortgage lending right now, I know I would be successful because I know how to help people afford homes, and we'd figure out what makes sense. And, I understand the banking industry pretty well. So, to go back to answer your question, what I see changing a lot in the lending space, um, is coming up with ways to have people afford the homes that they can find. I think there's still obviously a large shortage of housing, but I can find plenty of homes right now that are for sale, $1 million or more, no problem. I can find them. Finding a home that is much less than that, depending on where you live, again, can be no problem. I can find homes in southern states right now that are sub 300,000, no problem. Where are the jobs? Where are these people making money? And so it gets into the affordability. For me, it's always affordability.
Oh, that's so true. And so many people, I see people, the biggest thing is living beyond their means and learning the hard way, learning the lessons hard. Um,
Yeah.
like if I had the the first home I purchased versus the previous home I purchased, um, I'm looking at an increase over 25 years. The cost of me purchasing my first home was like $65,000. And now the average cost of a home now is $487,000. So there's quite an imbalance there. But, you know, people just go to accept
I want you to
what's
look at something
available to
different
them.
though. I want you to look at something different in that same time period. I want you to look at the percentage of increase purchase price versus taxes and insurance. I want you to look at those other two components that people tend to just kind of slough off. And again, I've been watching this for a very long time. Some of the largest homeowners insurance increases have put people out of the market. And this includes condominiums that have to pass along their insurance to their tenant, to their whatever, their owners of the cooperative, their shares. But I think when we look at qualifying, again, I live in New Jersey, right, which a lot of people think is like taxes galore, and it's honestly not like that. That comparison, I think, is long outlived the reality. The reality is property taxes and property insurance in other places like Florida, Texas, California, Washington State, even some places around Philadelphia, or again, even depending on where you go, and some other southern states, you got to look at taxes and insurance. Those are the two things that I think people overlook quite a lot. It's kind of like buying I don't know if you ever had this happen, but you buy a car, right? And nobody thinks about car insurance. And you're thinking about the monthly payment for the car. You're so hyper focused on that. And then you're like, get the car, and you get the deal you think you get, and then you call your homeowners, and they're like, oh yeah, by the way, that car, yeah, it's going to increase your homeowners your auto insurance by $250 a month. Oops.
And put that
So
on top of everything else.
so
Yes, and then the cost of operation, upkeep, especially with homes. I know people. Well, you need to upgrade. They want to upgrade their homes. Well, where do they get the money for that? On top of everything. I've encountered that over the years,
yeah.
owning multiple properties, and you get to a certain point where if you don't have the funds, well, it just doesn't happen. And
Well, you
so
borrow
many
credit
young
cards,
people,
right? You
yeah,
you go on credit card debt, and I think again, not to make this all about financial stuff, but it's I've seen it. I've seen it happen over and over again, and I don't know the right answer. I really don't. I can just tell you personally, um, debt kills more situations than anything else historically. And you try to be smart about it. You try to be planful about it. Sometimes you can't control it, but I think for what I see happening in the mortgage space, to wrap this back up, I think affordability ties everything together. And whether it's having enough down payment or coming up with smart ways to deal with existing debt, I think people need to work with folks that focus on that affordability conversation more than anything.
right. And I think that's what you would spend a lot of your time doing. I'm guessing when you have people come in originally, uh, because based on ignorance, that lack of knowledge. I mean, you have to educate people, I'm sure, every day that you come across.
Yeah, yeah. I've always been a proponent of education. My grandmother's a teacher. I tried. I actually thought about going into teaching in right after the last financial crisis in '08. And there just wasn't enough money in it for me, truthfully. I wasn't in a position to be able to afford that lifestyle of a teacher. So I chose to take that perspective and really put it professionally out there in teaching. And so I spend a ton of time teaching. I spend a ton of time teaching folks how to, through the mortgage industry and on this Encompass platform. That's kind of where I get my teaching bug. Kind of
Well, you
that's
get
how
to
I deal
put
with
your
that.
teacher's hat on there. That's
Yeah,
part
yeah,
of it,
yeah. Totally,
Y-
totally.
You
I'm
know,
working right now. I'm trying to work with some folks to get our platform into a professional level, a college level or professional series, because there really isn't any. I mean, if I go out there and look for um, courses of how do I use, again, it's hyper focused on Encompass, but how do I use Encompass as a user? How do I use Encompass as an administrator? On a professional level, again, I want to really focus in on this workflow before technology. I think there's a lot of folks who continue to believe that technology will somehow save us all, which is a complete farce. It's the objective perspective of what are we trying to accomplish? What do we have on our desk to get this done, or in our company to get this done? And when we run out of those resources, then we can go figure out what other things do we need. Um, I think people forget to to use what they have first. They need to really exploit what they have first before they go exploring other things. Um, doesn't mean you always have what you need. It just means I think people are too quick to keep gathering stuff that they're like that they already have. They just didn't take the time to go look.
fair enough. It's a good philosophy to to go by. It's a good comparative. Now, question in your industry, which metrics or your KPIs are getting the most attention on your dashboard right now today?
Uh, pr- uh, the amount of money you're keeping in your operations, and I hate to use the word profitability because it's not always about profits. As an example, like my business serves a lot of credit unions. Credit unions are not for profit, right?
Right.
It's about making sure that all the money you're collecting, you're using in an effective way to help your customers, in the case of credit unions, your members, but then also how to keep growing the business. And so what we've seen happening over the last several months with regards to KPIs and lending in particular is the cost to produce a loan. Cost to produce a loan. I'm not an economist, right? I don't study numbers all day because it would drive me nuts. I chose not to go into accounting because I don't like staring at numbers all day. But I understand patterns really well, and so the pattern that I see in the mortgage industry is a level of inefficiency that a lot of companies think can be solved by AI or solved by technology. And so again, I'll use last week at this conference I went to. Everyone I spoke to had basically two paths they took in their technology to support their business. They built it themselves, or they generally used Encompass. And the reason for the split had to do with the overall services to the entire organization. Because again, these are large credit unions, largest in the country. And so where I'm leading you is that I did a workshop, and I'm going to hold up an exhibit that I just happen to have on my desk because I was given it as a souvenir. But in the workshop, it was an operations workshop that I was conducting, and it was to really work on efficiencies and really leveraging the things you already have in ways you might not have realized. So one of the activities I had all the tables do was to draw. I said, I give you 10 minutes. I want you to pick a particular process that's in your mind, and I want you to document the steps that you go through. And most people were able to give me like 4 or 5 steps, and we talked through that kind of a thing. This particular member gave me an entire, like, this was done in about 7 minutes, right? And so this is someone who knew their workflow inside and out. And it was kind of a cheat moment for her because they were literally they're rebuilding their new iteration of their custom built platform that they're building for rural financing. And so she had it in front of her head. So
Well, yeah, it was
um,
fresh right then
it
and
was
there.
fresh, right? It was
Perfect.
fresh. So, but the reason why I bring this up is because when when it comes into KPIs and it comes into what's hot right now or what everybody's talking about, if you Google that, you'll see AI. You'll think everybody's, like somehow AI is going to do this. AI doesn't do this. Humans do this. AI can actually figure out which part of these things can be interpreted so that I don't have a human set of eyes looking at a screen to interpret data and then make decisions. That I can use software, whether it's AI or just a custom set of business rules, whatever. But that goes into the effect of trying to cut down the cost to originate a loan. And so, where everybody else is talking about technology, I'm out there talking about workflow, because I know I can reduce the amount of people it takes to produce a loan if I can get an optimal workflow for that company. Hands down, I can do it. And that's why I focus on workflow first.
That's a good answer. You
Thanks.
must speak a lot.
I
You
do.
must educate a
I
lot. You
I
do.
do. I try. I do move my mouth quite a lot. And I do have a very particular position on what I speak about. Um, because it's technology agnostic. Like I again, my younger daughter just traveled to go back. She lives out in Seattle, and she's we're packing, right, and she's very stressed out that we're going to fit everything in these two suitcases. And I said it's a 3-step process. Number one, identify what you need to take. Number two, identify the containers that you're going to take it in. Number three, start packing. And we kind of laughed because I go through this process a lot. And sure enough, at the end of the day, the bag was 49.5 pounds. She made it back safe last night. Everything was good to go. But I'm just a methodical thinker on that process. And so, go back. I'll bring this up on screen one more time. When I go back to this process, this is not unique to them. This is I honestly can't read much of the handwriting. I kind of know what it says, but the idea is I know how mortgage works. Mortgage hasn't changed. A borrower applies, a borrower closes and gets their money. That's it.
That's
That's
it.
it. No matter what industry you're
Well,
lending money in, they have to apply, and you got to decide if you're going to give them money. What happens in
well, see,
between is the
that's
magic.
simplistic to you because that's what you know.
Right. Well,
Someone like me, if you'll notice, I've just been picking a little bit here and there because I'm listening because I can't interact with you based on what you do because it would sound like Snoopy talking to Woodstock. It just wouldn't work. I knew you get your age, you get that analogy, but
right.
that's why I like speaking with individuals such as yourself and people that I can reach out to or other people can reach out to because people won't admit they don't know. So if they don't know, you have to find out the information and where to go to get that information.
It's so
And
crazy to me, but you're 100% right. It's I'm the first one to say I don't know what that is. Tell me. Like I
yeah,
mean, I've had people tell me stuff about Encompass, and again, I've been teaching this thing for 20 years. Been using and teaching Encompass for 20 years, and somebody's like, "Oh, you can just do that in Encompass." I'm like, "Where?" And they tell me, I'm like, "Okay, cool, thank you. Like, I'll
yes,
take that away."
exactly.
It's not a big deal. But I do know there's a lot of folks who pin their, I don't know, reputation or they they personify to believe that they have to know everything. I said, "You're not a computer." Like honestly, I have AI agents that tell people stuff all day long. Like, well, I can answer that question. I would not have answered it that thoroughly, but that is correct information. So no, I don't know. Maybe it's my age. Maybe it's just my personality. I'm
I
not
think
sure.
it's
Right?
experience in
Yeah.
life too. Experience in life.
Yeah. I trust me. I'm always asking people teach me something new. Like, please
Yeah.
help me
Or
understand
people
something better.
when they make a mistake, just admit I made a mistake. I don't know how to do it. How do I fix this? Don't come to me with a problem. Come to me with the solution to that problem.
That can be stressful. Now, that's a
Yeah.
different perspective, right? So if there's a problem to be fixed, there's a lot of pressure because if you're the one that caused the problem because you didn't know what you were doing or you thought you knew what you're doing, but you made a mistake, Yeah, I learned a long time ago. You always got to fall on the sword quickly. The quicker you fall on the sword and apologizing is better than not waiting. Than trying to wait. The other thing that I would share on that, especially in lending, is you have to go deal with your problems quickly, because the longer you don't deal with the problem, the more expensive it becomes. And so, again, like I shared, my wife's an RN nurse, and she was in med surge. So med surge means plainly that after surgery, or in lieu of surgery, you go to her unit, or unit like hers, and pretty graphic, gross stuff. But effectively, if you don't deal with the problem you have in this person's body, they will die.
Mhm.
Like, they will legit die, whether they're on your shift or when they get home. And so you get in there and you do the work, you know. And so I think, professionally speaking, I think that a lot of people do tend to shy away from going, "Hey, I screwed up. I thought I knew what I knew, but I didn't. I was wrong. Tell me how to fix it. Let me get in there and get it fixed." I think the more people that can take that kind of an attitude, I think the better off we all will be.
I absolutely agree. Um, Now, speaking of that, quickly now, let's think of that. I know you think quickly, so let's go with the recent decision that you or your team made that you'd handle differently if you had a do-over, and what did you learn from it? So
Hmm.
one.
um, Out of my control, but growing too quick has always been a big problem that I've worried about. So last year, this time we had 4 people. Right now we've got 17, as I shared with you earlier. So, um, growing too quick can hurt a lot of people, can hurt a lot of situations. I don't think, you're asking me what would I do differently, or if I had a situation I would do differently. Um, I might have hired differently for the projects. I might not have taken on certain projects in the situation, in the order that I did. But some of these things you can't really control. And so, um, yeah, I think that's probably the takeaway is, making a hard choice of, do I decide to grow, to take on these projects and grow in the situation I did. Um, I'm a firm believer you are where you are because of the choices you made, good or bad. So I'm not a good revisionist. I'm not a good, I wish I wouldn't have done that, because I wouldn't be here. And even in the times where, I've failed business, and I've had foreclosures and I've had bankruptcies in the past. These are all choices, that got made, and some of these circumstances were within my control and some of them weren't. But I wouldn't be here right now if I didn't make them. So it's kind of a hard thing for me. I'm not one for regret. Um, I am one for some sadness for the way things happened. But at the end of the day, I got I got a chance now to help 17, kind of, at this point 14 other families, with an opportunity to grow, and a ton of clients to help, and a ton more people in the future to teach. And if I hadn't done all that, I wouldn't be here. So I don't know. It's an interesting question. But
I appreciate your answer, and
uh,
I have to say that it's been an awesome conversation, Larry. I thoroughly appreciate it. Thanks again for being so candid, thoughtful, and honest. I mean, I appreciate that. So once we wrap this series up of Beyond Business Barriers, I'll be putting together a summary of the key insights from across all our guests, and I'll definitely be sending one your way.
appreciate it. Thanks for the opportunity, Roy.
Thanks for the time.
See you now.